presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Eddie in Boca Raton. Hey, Eddie, what's going on?
Hey, Tom. How are you, man?
I'm doing great, man. Yourself?
Good, good. It is a treasure to have TFNN every hour during the trading day, to be there to help you, to guide you, and even to give you some peace of mind, or like that somebody else is there with you while you're trading this crazy market, either up or down.
Well, listen, we appreciate you growling and prowling with us out here, because we wouldn't be out here, folks, if we didn't have all you guys, gals, tigers and tigresses as clients. And, you know, the market teaches you every single day, man.
Now, Tom O'Brien.
What's going on, everyone? This is Jacob Shoup filling in for Tom O'Brien. This is, of course, the Tom O'Brien Show. Man, we have a pretty good show in store for you guys today. We have some good guests and everything to discuss certain topics about. And then, of course, we have a nice market moving right now. Now, you probably already know what I'm going to talk about, but we'll get to that in a moment here. Let's take a look at what we got going on just in the broader market in general. You have the composite up about 0.31%. You have the Dow Jones Industrial up about 0.75%. Yeah, that dollar still moving somewhat higher up on that counter trend bounce, trading at 103.60. Of course, we were talking with Steve Rhodes on Monday, and he brought up some really interesting points about some capital inflow to the U.S. Of course, we went over as well the potential for Germany to go into a recession as well. So you might get some capital flight from the EU in that capacity, which can kind of explain again this divergence you see, right? Usually you get a higher movement in the dollar, you get some sell-off pressure in the equities, especially such a strong move, counter than how we've been going for the past few months. Let's take a look. We got the we got the E-mini up about 0.43%, and then gold is moving a little bit today as well, trying to eke back up to that all-time high, 2,708. We were trading at 2,689 right now. Copper up today a little bit as well, 0.65%, trading at 436, and then silver up 0.55% at 31.93. See what else you got. Disney up 1.9%. That's pretty good. They're going to increase some of the prices of their fast track passes, however they call it. I think there's a new tier they're doing. And remember the headline saying it's going to give some Disney goers, price shock, ticket shock. And I respond to that is you clearly have not met people who like going to Disney a lot. They are so about it, and that's really what is so valuable about Disney is the way that they're able to really gain fans and then really retain them in a major way, and then provide, honestly, pretty good experiences. I'm not a big Disney guy. I don't go to it a lot. I don't really watch their movies or anything, but I did go to Epcot last December, and Morocco was almost my downfall. It was a great time, but as it stands now, Disney is up 1.9%, trading at $96. It's nice to see a little bit of life coming into that stock after making a pretty large multi-year low at 83.91. All right, let's take a look real quick at Intel. Just kind of down today. Off 1.3%. Really has not come to life at all after this massive gap down on some pretty high volume. We've been over this company multiple times and why it's just kind of in dire straits. There was some communication or some idea at least that Qualcomm might be buying a portion of them. Turns out that Qualcomm is going to wait at least until after the U.S. election in November, which is coming up very soon. Kind of nuts to think about, before deciding whether to pursue an offer to buy Intel Corp. So any kind of hope people had is like saying, hey, well, maybe we can get in here and Qualcomm pays, a premium, for the shares on Intel. It's just not happening right now. So you're getting kind of this sell-off as it stands, and there's not really anything interesting that's going on in this company. I think as well it, can be stated. I mean, you have Wolfspeed blowing up, yesterday and today. I think we're up like 18.3% today right now on news again of money coming from the CHIPS Act, right? And Intel, when this was being kind of announced, was supposed to be, at least everyone's head, a major beneficiary of this. And they've kind of continued to screw up every step along the way in their designs they have, and then it turns out that their foundry isn't able to produce some of these newer edge kind of chips, at least at production quantity. So Intel right now is off about 1.3%. And then I get to talk to you about what you all knew I was going to talk about, which is Kamiko Corp. Okay, we're up 8.10% right now, floating between 7.9 and 8.10. Let's take a look. Let's go through the whole thing. We have Oklo. I think that wrong. Let's take a look. Oklo is up 36.22% today. Okay, let's take a look at, I think this is news scale here. 36.08%. What is this all about? Again, this is my big thing. I say going forward on nuclear. Of course, Amazon looks like they're going to start investing in some small modular reactors. Of course, NuScale and Oklo are in that. I think Amazon is using X Energy. I really want to talk about, though, with Kamiko, right? Because it's going to be hard, I would say right now, to determine which of these SMR companies is going to be the winner. Is it going to be Oklo? Is it going to be NuScale? These guys are the ones producing these kind of things. That is really hard to say, I would say, at this moment. Oklo is a little bit interesting because it does have connection, obviously, with Sam Altman. That is the CEO of ChatGPT, of OpenAI. But one of the things that we can all say is going to be a massive winner is going to be the company that is supplying that material to whoever the winner ends up being. And that's obviously Kamiko. Now, I had gotten in decent position at Kamiko. You know, we were talking about, I think around this low here in September, this potentially being a really fantastic buy going forward. Of course, some of the news that's coming out is really pushing this guy a lot higher. I would say at this point right now, you know, you do have a high volume again, kind of a minor gap up, right? Large candle for the day, but that's all right. And we're getting very close to the high, right? 56.24. We are making some good volume. At this point here, I necessarily don't want to add more, right? I think still on the long term for sure, Kamiko is a winner, and we're all going to be sitting back having gotten this and be like, wow, that was such a good call, right? But this is going to be a few years from now. I mean, keep in mind, some of these reactors aren't planned to come back online until 2028, right? That's when you start seeing some actual financials come out that support this kind of concept. This is a lot of buying on news right now, which is totally fine, and people want to price in the future. But it's something to keep in mind. You still have a lot of time before, you know, I say you start seeing Kamiko produce even more, sell more per each kind of group cell they have. So I get a little bit, I would say, cautious at these kind of levels, because you could absolutely see a pullback. You know, they have earnings coming out on November 7th. The earnings aren't necessarily going to reflect this kind of stock price as they are now. That definitely can present a buying opportunity, I would say, if people kind of get scared on that. They're like, well, hey, wait a minute, this might be a longer term play than I had wanted. Sell off, you might get kind of back in. That's kind of my thought on Kamiko right now, but I still think on the long term, great buy. It's just a question now of what's the best time to get in, the best price point. Folks, stay right there. We'll be right back with a great guest coming up for you next.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, It has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, everyone. This is Jacob Shoup filling in for Tom O'Brien. This is, of course, the Tom O'Brien Show. Now we have a great segment coming up for you right now. You've heard me talk about this company quite a bit, mainly through the kind of vehicle of Gush and Drip, but also SPXS, SPXL, and of course, talking about direction. We are joined right now by Elliot Wellenbach. Elliot Wellenbach is a senior VP of direction and institutional ETF strategist. Elliot, how are you doing?
I'm doing great today. How are you doing?
I'm doing well. We're getting a little bit of cold front here in Florida, which is pretty nice. First thing I wanted to talk about, Elliot, I brought up Gush and Drip, and I think I'd mentioned this to you last time. Before I even worked for TFNN, this was one of my favorite kind of plays to do, right? Now, we have a lot of really interesting stuff going on in the oil market. Of course, you had a pretty interesting run-up around, at least in the crude futures. I think up to a high right now of 78.33, at least in that short term. Of course, you get a lot of upward pressure from tensions in the Middle East, but then you get some of this downward pressure as well from the deflation in China. And then, of course, we were going over yesterday how you had a lot of producers buying futures to lock in a sale at 78, which I think is kind of maybe a bearish perspective on that. Curious to hear what you have to say on that, what you're thinking, and kind of what direction is kind of positioned with on that.
Yeah, no, absolutely. A lot of different factors affecting oil right now, and also energy and oil related equities. Like you mentioned, we have geopolitical Israel and Iran. We saw yesterday Israel announcing that they might not be targeting Iran's oil infrastructure. Right. And on top of that, China, world's largest importer, there was a highly anticipated briefing from the finance ministry, and there were no specifics to incentives to boost consumption. Mm-hmm. So both of those, reports sent oil lower. And as you mentioned, we have a few leverage and inverse ETFs that track different oil-related equities. Gush and Drip is your oil and gas exploration production index. So again, all equities, two times leverage daily. These are short-term tactical trading products, but Gush is the bull fund, Drip is the bear fund. And then if you're looking to go a little broader, the energy select sector, ERX, ERY, both 2X on the energy select sector. And again, these are all equities, so they're not directly investing in oil and trading oil, but they're oil and energy related equities.
Right, absolutely. Yeah, and like I said, we have spoken on this show plenty of times with Gush and Drip, and they're just, it's really nice, especially if you're anticipating, some broader movements over the long term. I think some other interesting stuff we got going on today is really, I think at the crux, we have Netflix coming out tomorrow, right, with some earnings. And then you have TSMC. We spoke a little bit yesterday about ASML. Of course, they're providing the lithography machines for some of these foundries like TSM. I know some people were getting a little, I think, antsy on the whole sector itself, right? Not kind of thinking, well, ASML is kind of the first spot you go to. And then you have the foundry, you have the demand for those final goods and things like NVIDIA. But you have TSMC, they're expanding production, I guess, in Europe. They're expected to report a revenue of $23.3 billion in the third quarter, a guidance of $22.4 to $23.2, $9.3 billion in revenue. That company seems like it's going to do pretty well. And you actually do have some leveraged ETFs for this as well. You have the TSMX, which is a 2x bull, and the TSMZ, which is a 1x bear. I want to talk a little bit about TSMC before we move on, but I was also taking a look too, just with the we have the thing going on with the AI potentially capping, the US capping AI chip sales. I was blown away really by how many different options you have with that, from NVIDIA to the AI bulls to UBOT. But I want to talk a little bit about TSMC, kind of what you guys are thinking, just like general macroeconomic kind of factors that are playing into the semiconductors right now.
Yeah, no, definitely. As you mentioned, we have a handful of single stock leverage and inverse ETFs. Leverage to the bull side, 2x, and then single inverse on the bear side. And actually, TSM, Taiwan Semiconductor, and Netflix are both newer additions to our overall suite of ETFs. And, as you mentioned, ASML really yesterday kind of sent the chips and the semiconductor space lower after, they had a slowing demand and also their projected revenue forecast moving forward. Yeah. That kind of sent a shockwave and some ripples throughout the broader semi space. And, exactly as you mentioned, TSMC plans to have more plants in Europe. And we've actually seen significant trading volume increase today in both our bull and bear products. So TSMX is the 2x bull, and then TSMZ is our bear. And across both those products, we've seen a pretty high uptick in trading for both those because, again, Taiwan Semi will be reporting before the opening bell tomorrow. So a lot of anticipation behind that.
Yeah, and that's what's so good about kind of these single, stock ETFs is if you have some good idea around earnings of, maybe what's going to happen, these really help you get some good exposure in that arena for sure. Another thing I think is super interesting, we're starting to see it wake up a little bit, right, is kind of the regional banks, right? You have the 3x bull, which is the DPST, that's like regions, citizens. You had M&T, an article on M&T actually come out today. It was from Gentler Capital Management saying that this is going to be a huge one, right? You're getting some major movements. Of course, they're now required to have a bit more I think capital on hand to kind of prevent what happened with some of them closing, a few years ago. But I do think as well, you're seeing the kind of lower interest rate structure that we're kind of moving into. Now, there's still a question, it's a gray zone, how fast that's going to happen, by how much are we going to get cuts each cut cycle. But this is where you can start seeing regional banks really wake up in a major way.
Yeah, no, definitely. The net interest income really in focus. Regional banks are more sensitive to that than your broader investment banks that have larger arms and different areas to provide sources of revenue. And you mentioned DPST, our triple leverage off of the regional banks. 48% of that basket is actually reporting this week, and right now it's trading at highs for the year. And if we actually look a little even broader off of the regionals to the broader financial select sector, we've had multiple banks, Goldman Sachs, Bank of America, JP Morgan, Citi, to name a few, that have already reported and actually have all beat. So we've seen a surge in equity trading revenue really from last quarter's market whipsaw and the VIX at its highest level since 2020. So We do have two leveraged ETFs off of that, leverage and inverse off the financial select sector as well. That's FAS and FAZ, both triple leverage and then triple inverse off the financial select sector. So, we have a handful of different ways to trade the financials and, like you mentioned, also the regional banks as well. And so some really exciting stuff and a lot of the basket for both of those indices reporting this week and next.
Yeah, absolutely. And I was just taking a look at DPST. You're saying near the highs. I mean, yeah, that's moving up 5.15% right now as it stands. And, really what I love at least about the grander kind of banks in the financials is any way these interest rates go, you either get them lower, you get a tick up in rents, you get more, in income, you get a higher rate, you get more interest return. It's great. Elliot, thank you so much for joining me today. It's always a pleasure having you on.
Hey, thank you for having me. Always great being on with you guys.
Take care, Elliot. We'll see you soon. Folks, stay right there. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everyone. This is Jacob Shoup filling in for Tom O'Brien. We just had Elliot Wellenbach, Senior VP and Institutional ETF Strategist of Direction, on the show. If you missed that, make sure to go ahead and visit our YouTube channel, Tiger Financial News Network, after the end of airing today, and you can go ahead and see that clip we had. And again, really, I recommend going ahead and checking out them at direction.com. You can go over and click the leverage and inverse ETFs. And I mean, they have so much stuff. It is amazing. And like he was saying, the TSM is a new addition, and it's really amazing, what they can offer you over there. Now, yesterday, we were supposed to have one of our favorite guests on, and he was not able to make it. So we're going to bring him on today. That, of course, is Tim Ord of the Ord Oracle. That is ord-oracle.com. We have a lot of interesting stuff going on in the market. Like I was saying with Elliot, I think there's a lot of still uncertainty going on as far as rate cuts are concerned, where necessarily this market is going to go at the end of the day. And that's why we are bringing Tim Ord on. Tim, how are you doing?
Good. Can you hear me?
I can hear you fine, loud and clear. That sounded very good. Space age, yeah. Tim.
Well, good. Everything's working. We couldn't get things working yesterday, but we figured it out. So
fantastic.
I guess you got my charts.
I do. I'm looking forward to going over this too, because there's some interesting movement happening here. So
yeah, it's pretty interesting. Actually, chart one. I'm going back to Trump was a candidate in 2020. He was also a candidate in 2016. And I went back and looked to see how those buy signals were generated, or sell signals, depends what was going on. And for some reason, I always said, if there's no panic in the market, there's no bottom. And for both those lows in November of 2020, 2016, that's November 5th, or the November election of 2016, 2020, the 10-day trend never got to 1.2 or higher range. So that kind of puzzle is kind of an anomaly. I guess maybe that just happens every 4 years. Mm-hmm. So I kind of looked at other indicators to find which ones actually worked or gave bullish signals. Because a lot of times you go into election, the market usually declines. Anyhow, the first chart is the election of 2020 going into that November low. And what did work was the RSI on the SPX tilt ratio. The bottom window is the 10-day average of the trend. If you look over to the November time frame, I got it shaded in pink there. September to part of November, which is kind of the area we're in right now, the time we're in right now. And I wanted to see what happened going into that November election. Mm-hmm. And if you look at the bottom window, the 10-day trend, and right at that November 1st area was coming around neutral, now around 1. So it didn't really give good information that was a low. But if you go to the top window, which is the RSI for the SPX tilt ratio, which is the next window down, the second window up from the bottom is the SPX. So, but anyhow, you did have a down surge in the SPX tilt ratio and push the RSI right around that 30. So in my opinion, he did give it a buy in mid-September there, and he gave another buy going into the election. And I think that buy signal came in on October 30th. I listed on another graph, I think, but anyhow, that gave a buy. So that's 2020 low. Let's go to back to 2016 low.
Yeah, we have it up right now.
All right. Okay. This is a 2016 low, and again, the bottom window is the 10-day trend is right around 1, not giving really panic readings at that low, but going again, top window is the RSI for the SPX tilt ratio, which is the next window down, and it did give a buy signal. So we got two buy signals on the RSI on the SPX tilt ratio. So let's look at where we are right now. And top window is the RSI. Next window down is the SPX tilt ratio. Next window down is the SPX. And this is yesterday's reading. It came in around 67. I just looked at it, and we're around 65 RSI right now. Still kind of heading down here, but we need to get close to 30, and that's what I'm going to be looking for. How low can this pullback go? It's hard to say. I think we're probably going to find support. There's a gap, I think, was on October 8th. I didn't put it in on this chart, but there's a gap there around 5,700, 55, or 5650, 5,700 on the SPX. There's a gap there, and I'm thinking probably at a minimum we should get to that gap, and ideally that gap would be tested the same time as the RSI gets around 30. So that's what I'm kind of looking for. This year the election is November 5th, which is almost 3 weeks away, a little less. This week in the market is expiration week, which normally has a bullish bias, but election years only come out, every 4 years. So things are kind of an anomaly here. This is not like everyday trading, especially going into elections. So you got to be careful what you look at. I did get kind of a bullish signals here a couple of weeks ago. I didn't take them because usually the rallies are more meek. This one is actually halfway decent. But I'm kind of waiting for the big setup, in my opinion, is around that November election time frame. So a lot of times these signals are generated before the announcement of the election. So I think the election will probably occur end of this month at the very latest, early before the election occurs on November 5th. So the market, in my opinion, will probably start going up on before November 5th announcement, because the market will know in advance who the president will be.
Yes.
So anyhow, the market anticipates, and usually if it anticipates something, it's right. And also, you shouldn't buy on news. The market knows before the news even comes out. So the market may already have started its rally. So we'll see how that works out. But right now, I think the best is still sideways this week and probably start to decline, if not later, not this week, but next week going into the election. And I think the market will bottom before the election occurs. So we don't have a lot of time, I know.
We'll go back to the next break. But you're right. I think even looking through the past, like how the general market behaves right up into the election, this rally in particular is pretty strong, again, especially in the SPX. But yeah, Tim, stay right there. We'll be right back. We're going to go over the rest of the charts with Tim Ord of the Ord Oracle when we get back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everyone. This is Jacob Shute filling in for Tom O'Brien. We are joined right now by Tim Ord of the Ord Oracle. Before we continue on, I want to help you guys take a look right here, the services tab on TFNN. If you like what Tim is saying, and let's be honest, this is a fantastic technical analysis he has going on here. I know we all really enjoy when he comes on every Tuesday and Thursday. We have two fantastic webinars that Tim did right here at TFNN.com. If you want to learn a little bit more about how Tim reads these charts and kind of what it's all about. We have the secret science of market tops right here with Tim Ord, and then the 6 secret ratios every trader should know. And these are for really kind of a steal price. We're selling for $149 each. Go ahead and check those out if you want to learn some more. Tim, before we went to the break, we were looking at chart 3. Take a look at the daily SPX with the RSI and the SPX tilt right there. But let's move on here. I know we got chart 4. Unless you got anything else you want to say on those charts.
Good. Chart 4, we got it up. The top window is the SPX VIX ratio. The next window down is the VIX. Bottom window is the SPY. And I got a shaded pink area. It's kind of where we are we're in that vicinity right now, and it goes into that November election time frame. But if you notice, the S&Ps were making higher highs going into, Monday, I guess you might say. And if you notice, the top window as the SPY VIX ratio made lower highs. That's the bearish divergence, and that divergence usually happen at highs. And there's another thing here also on the SPY chart. If the market goes up too fast or down too fast, the Bollinger Bands are actually a really good tool to find out where the consolidations may end up at. And this is a daily chart on the bottom window. And if the market goes up too fast, it busts up above the upper Bollinger Band.
Yep.
And that's 2 deviations away from the 20-day moving average, which is basically that dotted line. So if market's gone up too fast, it's not really bearish. It can be, but it normally means at a minimum, you're probably going to at least consolidate. And I circled in blue there, the blue circles, the times when it broke above and closed above the upper or lower Bollinger Band. And every time it did, it usually the market stopped going up or stopped going down. And this Monday, we closed above that upper Bollinger Band. And if you notice, we started a consolidation. So that kind of reinforces the SPX VIX ratio, which is the top window making lower highs, while SPX is making higher highs. That's a bigger bearish divergence. Suggests that at a minimum we should move sideways here, and probably we're going to start pulling back. And this chart on the SPY, I do have that gap listed there. That it's kind of a light red, I guess, right around that 565, 570 area. I think that was October 8th, that gap form. So I'm thinking we pull back there at a minimum, which is close to if you draw a trend line across the previous highs of July and August, that comes in pretty close to that range there too. So probably between 560, 570, in my opinion, is where the next low will form. And the next low, what I'm going to be looking for is what the RSI does on the SPX tilt ratio. So if it gets around 70, that would be a bullish sign for me for the bullish setup, because I think in general this rally is not over. I'm really surprised. We've kind of rallied over the last week or so. That usually doesn't happen, but market does what it wants to do. But anyhow, this rally is not done. We are, I think, the most powerful rally will come after the or probably a little bit before the election, and it'll probably rally pretty good going all the way into year end. How high is high? I think there's a good chance we'd probably have another 10% onto this rally. So we'll have to wait and see if that works out. But internals on the market, like the summation index, I look at that. Last week it got over plus 1,000. That type of reading on the summation index, that's McClellan's summation index, doesn't come tops in the market. You can have consolidations, but usually they're the warning that a bigger rally is coming in front of you. So there's a lot of energy in the market that is coming, that's already there. It's going to probably show up here first part of November. So anyhow, that's my analysis on the S&Ps. Let's take a look at the gold market.
Fantastic. Yep, I'm pulling up right now.
The first one is the top window is the bullish percent index for the gold miners index. And what the percentage of bullish percent index is measures the percent of stocks that are on point and figure buy signals in that index, which is in this case the gold miners index. And right now, I got shaded areas when that index is above 60%. In other words, 60% of the gold miners index are on point and figure buy signals. We're up around, when I made this chart, we're up around 82% right now. It's been in that range since April, end of April, or actually end of March, 1st of April. And that's where, if that stays there, which it has, that's where, the big rallies start from, like the rally in 2016 that pretty much stayed above 60% buy signals. Also that rally that in 2019, a little bit late getting the signal, but once it got there, it stayed pretty much all the way into above 60%. So right now, internals on GDX is just there's really nothing. Not too exuberant. If it gets too exuberant, that's usually a bad sign.
Right.
But it's staying right there, right around the 80%. So there's a lot of gold stocks that are starting to go up, and I think that number will probably increase. Let's flip to another chart, see where we are right now.
Yeah, fantastic. We have it up.
All right. This is the last chart. This is yesterday. Today is pretty much the same thing. It didn't really do anything from yesterday to today, but the bottom window is the 50-day average of the up-down volume percent for GDX. And in general, when this indicator stays above zero, the market's in an uptrend. You can have short-term corrections, but not really worthwhile tops. I mean, market can pull back, but this is kind of measures the strength of the market. And this one gave a buy signal, looks like about end of March, 1st of April, and it pretty much stayed above, actually has stayed above zero. In other words, when this indicator is above zero, this suggests the market GDX is in an uptrend. So it's specific for GDX, which is basically an ETF for gold stocks. Right. And so it's been up, 6 months? 6 months it's been above zero. And it's staying above zero, plus 15 right now. Yesterday was 15. I think we're 14 plus today. So it's not backing away. It's just staying in that plus 15 range. So the market is just kind of regenerating its energy. And if you look at the top window, which is GDX, we're up against the previous highs of 2020 and 2021, around the 40 area. And we're not backing away from it, and this indicator is holding above 15, suggesting that we're probably going to bust through it. So how high is high? It's hard to say, but there's no sign even on a short-term basis here, that we're approaching a top for GDX.
Fantastic. Guys, if you want more from Tim Ord, you can go ahead and go over to ord-oracle.com and get some of his webinars from the services tab on TFNN. Tim, thank you so much for coming on today, and we'll see you tomorrow.
See you tomorrow.
Fantastic.
Sounds great.
Good deal.
All right.
We'll see you then, Tim.
Talk to you then. Bye.
Folks, stay right there. We'll be right back.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everyone. Jacob Shoup filling in for Tom O'Brien. We get a short break right now. We were just joined by Tim Ord of the Ord Oracle. If you missed that or want to go back over it, you can go visit us after the end of programming today at Tiger Financial News Network on YouTube. Make sure to give that video a like if you do it, and give our channel a subscribe. It helps us all out immensely, more than I could say. We're seeing some people in the YouTube chat talking about some different, Donald Trump plays with DJT and Tesla, very true. And then also some stuff with Bitcoin, which I think, was definitely true in the past, but now it's also a Kamala play, which is kind of strange, right? So they have a newly announced proposal, establish clearer regulatory frameworks. Don't have enough time to go over all those right now, but I will be filling in tomorrow so we can kind of dig into that a little bit. But it seems like Bitcoin is, winning right now, or at least coin in general. You have Coinbase at least up 7.74% on this news, especially after a pretty, this is supposed to be Uptober. At least I was told that, but my friends who are big Bitcoin proponents, and there was really a lot of lackluster behavior, I think, recently in this asset. And I think probably just waiting on some more discussion to see what was going to pan out on a political level. Take a look as well before kind of the end of the show here today on Cisco. You know I love my cybersecurity stocks, up 4.22%. Of course, in the past we talked about Cisco, talked about Juniper, all this kind of stuff. And basically Citi has upgraded Cisco to a buy, which is pretty solid. And a note to clients on Wednesday, the analyst said that although AI currently only accounts for roughly 2% of Cisco's revenues, the company is tipped to see a boost from expected growth in the use of Ethernet switches and connecting AI-focused graphic processing units. That's super interesting. I think if you get into a realm where Cerebras actually does, finally push its IPO through and people start using Cerebras, that might get hit a little bit. But it says Citi analysts now estimate the Ethernet will garner a high 40s% share of roughly $10 billion AI switching market. Pretty insane. A lot more to say on all this, but you're probably going to hear it tomorrow. I'll see you then. Thanks for joining.